You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back, Jim.
Janet Yellen did some Yellen last week, or did she? Or was it more like a pussycat purring itself to sleep?
Oh, it just, I'll be nice here, but she sounded like a bumbling fool when she was answering a lot of the questions that she was fielding from the press. I mean, you could have taken someone out of the crowd and, they would have been, sounded just as confident as her in answering the questions. So, there's a real issue there. She's obviously a scapegoat, Fed chairman, and, things are the holes are starting to show, so it does make sense. But, when you can't even sound convincing, there's real trouble. I mean, look at Greenspan, he spoke, anything but common sense, but at least he sounded convincing to the layman that didn't really think about what he was actually saying.
And you said a hole has already been punched in Yellen's credibility.
Oh yeah, just because, she just sounds she sounds so confused every time she speaks. She isn't really giving much guidance. She's just saying, we're more or less sticking with the same guidance we provided, but that's all subject to change based on any changes in the economic landscape. And so that's really not saying anything. A lot of talk, but not saying anything. Didn't
she say the U.S. was below its target for inflation?
Oh yeah, so that morning, May CPI came out at 2.1% and year over year through the month of May, and she said during her talk that inflation remains well below our target rate at 2%. So that just shows her credibility right there. And even if you look over the past 3 months, inflation is the CPI, I should say, not inflation. The CPI has risen 100 basis points, 1%, just over 3 months. And so when you're having problems holding down this already, doctored to death number, there's real problems of inflation servicing in the economy.
And you said, too, the consumer price index, the CPI, isn't really the cost of living because both the Canadian and U.S. governments decided some time ago, well, we're not going to include housing and we're not going to include energy because they're too volatile. Well, what's the most costly thing you probably do once a week? Fill up your car.
Exactly.
And you need a place to live. So you take those two things out, well, what's left?
Exactly. They probably, I don't know the exact weightings, but I'm sure they weight electronics pretty heavily because those are the one thing in the market that fall in price because the government doesn't have too heavy regulation in that market. And even if, you look at inflation with what they call a core CPI, stripping out housing, food, and energy, they still use hedonics, which is basically if the government deems that something has improved in quality, they will readjust the weighting downward. And they use geometric weighting, which always causes the number to be lower than it otherwise would be. And they do substitutions, for example.
Steak gets too expensive, they use hamburger.
Exactly. And they used to do these adjustments every 10 years, but I can't remember what year it was, but that's been changed to every 2 years.
Why don't they just ask the average person or do a survey? Have you found the cost of living has gone up and on what items? Not their typical basket of goods, which is, I looked at it, it's a bunch of junk food that a healthy person wouldn't touch with a 10-foot pole, whereas we would say in Canada, a 3-meter pole. But still, it doesn't seem to be very realistic to me. I think that whole consumer price index has to be readjusted to reflect real inflation. And when we talk to somebody like John Williams and Shadow Stats, he says the real inflation rate right now is probably about 9%.
Yeah,
and
actually,
who's getting a 9% raise this year?
For May at 9.9.
Yes, there you go.
And that's seen because it is actually being seen in the CPI, even though how I mentioned how doctored that is. So things are not looking good. I mean, they're trying to hide it with all these gimmicks, And with these reports saying consumer confidence is at a 4 or 5 year high, this and that. But, I really doubt it. I think it's all, they're trying to use their number one tool, that is psychology, market psychology, and trying to influence that.
Well, when it comes to mining stocks, finally, a breath of life.
Yeah. It's been a while since, we put in the lows a year ago. And, we've just been in a trading range since then, both with the mining stocks and the metals themselves. So finally, last week, even before the day after the FOMC meeting, the miners have really been taking charge and moving ahead. But then that was quickly followed by both gold and silver. I think silver was up almost 4.5% last week, and gold was up roughly 1% less. But that's still a huge move for 1 week in a commodity and commodities.
And the financial paper headlines in Canada are saying while the Dow has gone flat in the last little while, the TSX in Canada has been moving along quite nicely, finally regaining some of the losses that happened 5 years ago. And gold is the big reason why. Yeah,
and that's why I think the TSX is going to hold up so much better than the Dow or any of the U.S. major stock market indices, and that's just because, we don't have a lot of resources. Well, we do, but, there's so many environmentalists that really the only place you can mine, say, silver and gold is Nevada and, a few other states, but, the permitting process is just a pain to go through. Meanwhile, Canada's a lot more lax. They just make sure, there's minimal environmental harm, which is the way it should be, instead of, just giving into these groups when they don't even own the land, as long as it doesn't harm the environment.
Now, I've noticed that, platinum and palladium prices are down a bit, but do you expect that downtrend to continue?
No, I mean, there's two reasons why, I think I'm more bullish on palladium than platinum just because the price differential doesn't make sense. But, palladium's had a nice run. So, even if it didn't, pause like it's doing now, and I think that's because of the announcement of a lot of mines are going to be reopening. Although, they're not going to be very profitable because they gave into a lot of the, wage increases. And so the all-in cost of mining palladium, the lowest 25% of the miners lowest 25% on the cost curve, it's still $800, $825 an ounce. So prices still have to rise pretty significantly for palladium to be, economical, just for the bottom 50% of the producers.
Well, I know for gold mining, for example, we always set about $1,200 as the price of production for 1 ounce. But with fuel prices just skyrocketing for no reason, apparently, because the world is awash in excess oil right now, those big mining trucks do use a lot of fuel.
Yeah, it accounts for roughly 25% of the mining costs, which is reflected in the cash costs, not other things, such as G&A, sustaining capital, etc. And yeah, I mean, those have been seen because it's not like oil is all that more expensive than it was. I think when the Iraq news came out, it popped like $5 in a day or two. But, even a $1 increase in the price of gasoline, that has, it has an impact on the margins of these mining companies because they're already running at razor-thin margins to begin with.
And, of course, the last time here in Canada we had fuel prices in the Vancouver area at $1.50 a liter. Oil was close to $150 a barrel. Now it's a lot closer to $100 than $150. Yet now we're paying $1.55 a liter in Vancouver, and we're wondering why. There's no shortage of oil in Canada. Why are we paying these high prices? And I've noticed in the U.S. too, gasoline hitting around $4 a barrel or a gallon very closely. And they say that's kind of the psychological barrier there. Once it goes over $4 a gallon, people do radically cut back on their driving. And we're going into the driving season, so I don't really see that happening.
Yeah, I don't really know the exact reason why that's happening. I'm guessing just the cost of refining oil and converting it into energy, or fuel, is just becoming more expensive like everything else in the world.
Yeah, it costs so much to drive those fuel tanker trucks everywhere.
Yeah.
That's probably the reason they're going to charge us more. Well, Chris, thanks a lot for talking to us.
My pleasure.
And we'll chat with you again next week. My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.